Hey gang, I'm Dr. Who. This is Accounting's a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly perform a cash flow statement. If you're unfamiliar to the details of a cash flow statement, don't fret. I'll drop a link in the video for you to be able to catch up with no time. So with that being said, let's get it. So it tells us for each transaction, identify the appropriate section of the cash flows to report the transaction. Choose from cash flows from operating activities, O, cash flows from investing activities, I, cash flows from financing activities, F. R is not reported on the cash flows, X. If reported on a statement, decide whether it should be a positive cash flow with a plus sign or a negative cash flow. Easy breezy, gang. Let's get it. First transaction. Before we go into the first transactions, let's elaborate on the cash flow statement quickly. The cash flow statement summarizes the cash activities into three major activities so that a business owner can be able to know how was his cash affected throughout a period. We have operating activities, investing activities, and financing activities. Operating activities would deal with any type of cash-related items that are relevant to the income statement, meaning revenues and expenses, or current assets, current liabilities. In terms of the investing activities, that will be those cash-related activities that are solely related to long-term assets. And last but not least, our financing activities will be those cash-related activities that are only related to long-term liabilities or stockholders' equity, which we know is broken down into two parts, paid-in capital and retained earnings. And so when we talk about cash-related activities, gang, if you think about the particular transaction, does it affect cash? And if it does, it's a cash-related activity. So let's take a look. A tells us the business received cash from the issuance of common stock. Keywords, receive cash and issued of common stock. So we notice a cash related activity because we receive cash. So the fact that we receive cash means that it's going to be an inflow. So we could go ahead and put the positive number right there. Why did we receive cash? We received cash because we issue common stock. Since common stock is a part of stockholders' equity, that will dictate that this cash-related activity is a financing activity. Next, paid cash on accounts payable for office supplies purchase. Keywords, paid cash and on accounts payable. So we paid on our account, gang. Now, the fact that we paid cash, we know that this is cash-related activity and it's going down. Now, what did we pay cash on? An account payable, which happens to be a short-term liability. Since it's a short-term liability, the rule dictates that this is considered an operating activity. And it makes sense, gang, because when you're paying on an account, that's what you have to do in terms of operating, paying on your current liabilities. Next, perform services for a customer on account. Keywords, perform services on account. Now, services were performed, which we know that affects revenue. However, it was on an account. Since it's on an account, no cash is related. Therefore, this is a non-cash related activity. So we're going to go ahead and put a big fat X. D, cash dividends were paid to stockholders. Keywords, cash dividends. So knowing that we paid cash dividends to our shareholders, we know that this is a cash related activity and it is decreasing in the business. Now, why did cash go down in the business? Because of dividends. And dividends affects retained earnings. And retained earnings is a part of stockholders' equity, which dictates that this cash related activity must be a financing activity. Moving on. Receive cash from a customer for services performed. Keywords, receive cash, services performed. The fact that services performed dictates that revenue was earned, gang. We know that we received cash, which means that it's an inflow, it's coming in the business. So we could go ahead and put the plus symbol. And the fact that it was because revenues were provided or earned that affects income statement. And since that affects income statement, we consider that an operating activity. I hope you guys are getting the picture of this. This is real easy if you think about it, gang. Just remember the rules. Next, purchase equipment with cash. Keywords, equipment, cash. So obviously this is cash related, and we bought some equipment, so that's going to decrease our cash. So we're going to put it as an outflow, a negative symbol. And why was the cash decreased? Because of equipment. And what is equipment? A long-term asset. Therefore, we are going to record this as an investing activity. Next, paid rent for the month. Keyword paid, rent. Now, fact that we know that we paid, keyword paid, tells us that cash is going down. So we're going to classify this as a negative or a decrease. And why did our cash go down? Because rent was paid. Rent is an expense. Since rent is an expense, it affects the income statement. And since it affects the income statement, this cash-related activity must be operating. Next, purchase land, sign a notes payable. Keywords, purchase land, sign a note. So what happened here, gang? We bought an asset land, but we also recognized a liability. We borrowed to buy this land. No cash was involved, and since no cash was involved, we are going to record this as a non-cash related activity with a big old fat X. Next, pay employees wages for the week. Keyword paid wages. The fact that it's wages dictates that it's an expense, gang. And we know that if it's an expense, it affects income. And if it affects income, it must be a operating activity. And since we paid, we must record it as a negative cash flow. And last but not least, incurred utilities expense on account. Keywords, utilities expense on account. Now, utilities expense does affect income. We understand that, which means it belongs on the income statement. However, it was on account, which means that we did not pay yet. We have to record a liability. So since this doesn't affect cash, this is a non-cash related activity which deserve a big old fat X. So we're going to check the answers, and we are clean as the Board of Health. Good job, gang. So this is yet just a simple illustration of how to recognize what activities belong where based on the following transactions for your cash flow statement. Hopefully that light bulb clicked, and if so, gang, and you understand further how to chase the bag with this accounting information, don't forget to like, subscribe, and share the channel with your friends so they can get to the bag too. This is Dr. Who, and it's always my humble pleasure to have your time, and I'll see you soon.